This video is going to be another I told you so in terms of bringing you the Market Watch data early, but unfortunately my computer wasn't cooperating. I didn't record the screen last week and just did not have the energy to re-record, so I apologize for missing a week. We're going to get right into the Market Watch data for April 2026 that TRREB put out earlier this week, give you a little bit of a breakdown if you haven't seen one already somewhere else on YouTube. So strap in as we dive into the numbers. First things first is our favorite part of this report. It's our year-over-year summary that kind of highlights where we were at last year versus this year, which I think is the most important thing to keep an eye on. You're going to see that prices are up from January to April of this year, to be expected every single year. And I'll show you a chart later on in the video. We see prices really crest April, May, as families transact in anticipation of moving in the summer once things slow down from a life perspective. Kids are out of school, easier to move in the summertime. Reason why we see this bump in transactions in the spring. But what are we seeing on this year-over-year basis? So sales, again, up 7%. It's the second straight month that we have seen sales up on a year-over-year basis, coming off a very low base of 2025, which I've talked about in many videos on this channel. So up 7% overall. New listings, on the other hand, down 9.3%. Again, this is off a very high base. We are seeing kind of record levels of new listings coming to market in 2025. The same thing was true of active listings. We really hit maybe all-time highs for peaks in active listings, which you can see is also down 6.4%. The story that buyers are going to love and sellers are going to be a little less comfortable with is the average sale price, down about 5% right across the board for all markets that TRREB looks at. But again, some more good news for buyers, I guess, here, that it's taking longer for these properties to sell. Whether you're looking at the listing days on market or the total life of that property, the property days on market, both up 16 and 16.2% respectively. Now, TRREB gets a little bit more granular in their report, which they show us breaking things down by the 416 and the 905. I'm going to do a similar exercise right after this, where I'm actually going to break down this year-over-year summary chart by market area to see who is really underperforming, maybe outperforming a little bit. Durham Region, you want to stick with me for those numbers because while sales numbers are up across the board, spoiler alert, it's a different story out here in Durham Region. But back to this kind of granular look by property type and by area. So we're seeing really the strongest performance. 905 detached properties sales are up 10.3% year over year. Semis are up 5.5%, whereas in the 416, we're seeing detached home sales up 6.6%, semis down 6%. And when you look at townhomes, condo apartments, performing stronger from a year-over-year sales perspective in the 416 than we're seeing in the 905. So a little bit of softness in the kind of smaller home markets in the 905, whereas it's the detached and semis that are really accounting for much of these sale increases that we're seeing. When you look at average prices, the numbers that a lot of people are interested in, we can see that in the 905, detached homes down 5%, semis down about 10%, townhomes down about 9%, condos down about 7.5% year over year. The only market that we're seeing any kind of year over year price appreciation is in those 416 semi-detached homes. Remember all the headlines that semis were making? It was early last year, maybe the year prior, where the semi market in Toronto was crazy and prices were going nuts over there. That seems to be the strongest market from that price appreciation perspective right now. Everywhere else is down in the 416 with kind of those detached properties holding up the best in terms of prices, but we continue to see condos get hit the hardest in the 416, down 6.4% prices year over year. So what is this all telling us? Buyers are coming back to market relative to a slow market, but are still being selective about the property types and where they are buying. Like that increase in activity is really defined in a few segments, and then it's a little flat in others. So based on that year-over-year summary chart that TRREB puts out, let's take a look at each market individually to see how they are performing in these metrics year over year. So if you look at Toronto as a whole versus the 7% that TRREB is seeing, Toronto sales are up 8.6% year over year. Buyers coming back to Toronto relative to that low base. Again, this could have to do with work from home being wrapped up. People want to be closer to urban cores where most of the jobs are. Maybe they're fed up with traffic driving in to the city already. So short-lived fad of kind of moving away. That work from home era seems to be coming to a bit of an end, leading people to flock back to the city. New listings, again, down 13.64%, but we're talking about from an extremely high base where we were at last year. Active listings, I think it's kind of safe to say we've probably seen the peak For active inventory, it's starting to dwindle on a year-over-year basis, down 12.4%. Average prices down 4.65% in Toronto, but it's still taking 20% and 33% longer to sell a listing, depending on the metric you're using, whether it's listing days on market or property days on market. So sellers are having to wait a little bit more to sell those properties. Buyers have a little bit more time to kind of mull it over and make their decisions. How about the sale price to list price ratio? Well, last year, on average, sellers were getting 100% of the list price. Now there's a little bit of negotiation room baked in. It's only 1% drop that we're seeing, but that's down to 99% in 2026. That's the only market I'm going to do this for. Toronto is a big market, mostly driven by condo sales when you're looking at just the subset. So freehold sales in April of 2026 actually outperformed condo sales when you lump in the detached, townhomes, and semis. Detached being the biggest driver of that freehold market is what we're going to look at here. Those sales are up 5.77%. New listings down 4.06%. Active listings down about 4.5%. And really these average prices holding up the best in Toronto, like we said earlier in the video, just down 1.9% year over year. Still seeing that it's taking about 16% longer to sell a property. So the average listing days on market was up at 22 here versus 19 in 2025. So that's 3 extra days on market. 16% makes it seem like a lot more maybe, but again, about 3 weeks to sell that detached home in Toronto. And again, whether this is the listing strategy change continuing to happen, less offer nights occurring, or whether it's buyers having a little bit more negotiating power, I think it's a little bit of both that's contributing to this, but we're seeing that sale price to list price ratio come down about, it's 2 percentage points move downwards from 100% last year to 98% in 2026. Now, this is all just Toronto condo apartments that we're looking at here. You can see that sales, again, have jumped almost 14% in the Toronto condo market. Less people bringing listings to market. Again, we've talked about this in past videos. This could be investors deciding that the sale prices just aren't there for them to get out of the market. So they're shifting a lot of this to the rental market as opposed to the resale market. But we've seen that drop almost 18%. Active listings down about 16%. And again, this was the huge driver in 2025 of active inventory across the board was coming from this Toronto condo segment. So down over 1,000 active listings year over year here. And average prices, like we talked about, down about 6.4%. So continuing to really grind in Toronto. This average price number coming down may be affecting, like I said, this new listings number. If we're not happy with the number we're getting, we're not going to try to sell. We're just going to try and ride this out and then see when things recover, or if it starts to make sense to be renting condos out and not being quite as cash flow negative as we've seen over the past few years. Listing days on market, again, it's taking more than a month on average to sell a condo right now. It was more than a month in 2025, but it's up again about 16% from where we were last year. And whereas you were getting 97% of the ask price last year on average, you're just getting 96% in 2026. We'll go through the rest of the GTA in order of sales activity, who's seeing sales increase the most. Starting with York, this has been the biggest outperformer of 2025. Sales up about 11.2% here. New listings down just 2%. So again, high base last year, more people bringing listings to market in York Region really than we're seeing in other areas of the GTA. That gap has shrunk really the least in York Region. Active listings still down about 3%, but this big change here, as we talked about, I think sales will increase more year over year in markets where prices are down the most. It's not going to hold true every single month, but I think that'll be the general trend as buyers can start affording properties more so. Like on the whole, we'll see sales activity increase because buyers can get back into the market. So sale prices, the average sale price in York Region down almost 10% right here. It's still taking about a month to sell a property. This is across all freehold and condo types. So that's up about 12% from last year. Property days on market up almost 20%. And again, that sale price to list price ratio, this is going to be a common theme. Everywhere's nudged down about a percentage point right across the board, meaning buyers are more in the driver's seat as we get into this market. Our next biggest jump in sales activity was out in Halton region. There's also something else special about this chart. Let me know in the comments right now if you can see what it is before I get to it. But sales up almost 8% in Halton region. New listings down about 10.5% from last year. Active listings down about the same margin. We're almost about 3,000 active listings in Halton. It's down just shy of 27. And here is what I wanted you to point out in the comments. So go in the comments now. Look smart after I'm covering this. Get some clout on YouTube here. But up, the only market that we're seeing prices actually up slightly, the average price at least, in Halton Region. Could this be because Oakville is being the most active market where the prices are highest? Probably. On the whole, we're not seeing year-over-year price drops in Halton Region. That being said, it's still taking longer to sell properties. We're up to a month to sell a home, so up 20% from last year. Property days on market, closer to a month and a half to actually sell the property when you consider all the terminations and relists. And again, buyers here, even in spite of prices holding the most steady across the board, are still getting the best kind of negotiating power relative to list price. We're seeing it up down at 96% versus 98% last year, so moving down 2 percentage points. Now, Peel Region reported actually 2 more sales than we saw in York, but the increase wasn't quite as much. They had a little bit busier 2025 than we saw in York Region. So sales up just 2.79%. We saw new listings come down almost 9% from last year. Active listings again trending down, up over 5,000 last year. Now just about 4,650. Average prices again continue to correct and Peel. I feel like last year around this time was one of the first times we'd seen the average prices in April come down below $1 million, and that trend has continued in 2026 down to 950,000 or so down about 5%. And again, our listing days on market, our property days on market up at about a month and a half, up 24 and 27% from last year. And that sell price to list price ratio, like I said, down about 1 percentage point from where we were at in 2025. Now, being out here in Whitby, this is the market I usually start the stats with, but we're wrapping it up today because on that year-over-year basis, sales in Durham Region are actually down 8%. So yeah, down 8%, just over 700 sales reported in all of April, all across Durham Region. New listings down 10%, active listings down about 5%, and average prices continue to fall, sub $900,000 now in the spring market, coming in at $844,018. Things are still moving relatively quick to the rest of the GTA out here. It's taking about 3 weeks for a listing to sell, just over a month for a property to sell. And again, whereas last year at this time, we were seeing that maybe offer night strategy work a little more across the board, it's really just happening at the low end of the market at this point in time. So that 101% sale price to list price has actually come down to 99%. So it's bumped down about 2%. But again, very interesting that we're seeing sales in what is historically the most affordable pocket of the GTA come down the most. And I think it was Daniel Foch had an interesting theory about this. Could it have anything to do with the new HST rebates that have been implemented, HST and GST up to 1.5 million, and for all buyers of new construction products. Most new construction out in Durham Region is that freehold property type. Could people be being pulled out of the resale market into the new construction market already? Something tells me it's a little too early for that effect to be taking place to this degree out here, but something to keep an eye on as we go forward. Wrap it up with a couple charts from the Habistat. This is going to give us that month over month look at what is actually happening, because we've been focusing mostly on year over year. Going to kind of wrap it all into, I guess, month over month and year over year here. Starting with those average prices. So purple line that's highlighted right here is average prices across Toronto, Durham, York, Peel, and Halton Region, all lumped into one, all property types here. And that purple line, buyers are going to be happy that prices are down year over year, but I don't think they're going to be super happy with the direction of this line. Again, you can see most of the time the shape every single year is up and to the right through the spring market. 2022 here is a bit of an exception. Again, started the rate hiking cycles and we started to see prices drop, but really every other year you're seeing price growth through the spring. So if we highlight 2026 again, that same thing is happening. Maybe a bit bigger of a bump in average prices than people wanted to see. It looked like things may have been leveling off from February to March, and maybe we would see some downward movement, kind of similar to what we saw, not necessarily in that first year of the pandemic in 2022, where prices came down as a result of shutdowns, but maybe hoping that prices had peaked. They're not. They're kind of closing the gap to where we were back in 2025 and still not nearly as close to maybe 2019 prices as people were hoping we'd be at this point in time. Something we're going to want to keep our eyes on is these active listings. I know that sales were up and new listings were down across the board. You might think that means, hey, price pressure upwards as a result, but I think it's these active listings that are going to be more important, because the more active listings you have, the more selection buyers have, the more selective they can be about what they are purchasing. And that's when we continue to see prices come down. So again, 2026 is well and above everywhere except for 2025 when we saw those record peak inventory levels, but still way more selection right now than you're seeing even back in, crazy markets like 2017 or when corrections started or continued in 2018, 2019. We're still seeing inventory up from those levels, up at just shy of 25,000 in 2026 versus 2018, 2019. We're hovering right around 16,500, 16,600. So a lot more selection for buyers out there right now. Again, the ability to be selective, to negotiate harder on prices. Really, it's sellers competing against other sellers right now. It's not buyers competing against other buyers. And this doesn't hold true across every single market segment. I'm working with buyers out here in Durham Region at entry-level price points, and we were up against 15 or 16 offers the other night in a situation where place was listed artificially low. So you're still seeing buyers compete for certain properties, but it's not across the board where you could list a 4-bedroom detached home using that offer night strategy back in 2021, 2022 and get great results. Now it's really just happening at that entry-level price point. So yes, there's competition in certain segments, but when you look at everything on the whole as an aggregate, and I think it was really highlighted pretty well in this Market Watch report, in this breakdown, competition is not everywhere right across the board. And even in the markets where you think competition would be up and sales would be up because of affordability, i.e. Durham Region, we see those sales numbers coming down. Is this a trend that continues through the rest of the spring market? Something you're gonna have to tune back in for. Let me know in the comments what you're seeing in your neighborhood. And if you got some value out of this video, you enjoy the content, please like it and subscribe to the channel so I can reach more people just like you. I always invite you to book a call with me directly in my calendar. There's a link in the description of this video to my Calendly page where, again, you can book a conversation right with me, 15 minutes, talk shop, talk real estate market, talk whatever is on your mind. Please book that call. I'm happy to chat. Thanks so much for sticking with me right through to the end of another video. Until we speak again next time, please stay safe and cheers. I hope you enjoyed the video and that you're getting some value out of the content. If you are, please like the video and subscribe to the channel. If you're interested in seeing some more videos that I've done lately, there's another one on screen for you right now.